Hello and welcome back to Cryptocurrency Trading Masterclass by Wealthy Education. In this video, we're going to take a look at a three candlestick pattern called Three White Crow, Three Black Soldiers. They are two different patterns. So you have the white soldiers on the left and you have the black crows on the right, or green and red. This harkens back to the old black and white charts like in the newspapers and such. Essentially what happens is, this is basically a stock market pattern. It really doesn't happen in crypto, but there are ways you can modify it. So essentially what happens is, on a daily chart, you get a move to the upside. Then the second day you get a gap lower, which should be very negative, but we blow through that gap and continue to go higher. Then on the third day you get a gap lower and you go higher. So the idea is that the market might do something like this, and the second day comes in on a gap lower, which should send selling, but we wipe all those sellers out. And then we do it again. And that just shows real tenacity. Same thing here with selling. You get a gap higher and the sellers come back in. You get a gap higher and the sellers come back in, right? So it does make sense that it shows real strength or weakness, depending on which direction. So in crypto, what we're doing is we're looking for candlesticks that, instead of doing this, might do something like this, where it dips into the previous candlestick. Because, we don't really close, and that by itself would make the existence of the three white crows or the three white soldiers or the three black crows completely impossible. But here's an example of what I would consider to be three white crows on a 4-hour chart in Ethereum. And that's because we dip into the previous candle and continue to fight higher. Basically, it's a momentum play. That's really all it is. You don't need to overcomplicate it with anything more than that. You get your moving average, the 9 moving average, showing signs of strength. That makes quite a bit of sense. Quite often, you'll see it after a break of either resistance or a psychological level. Well, 800 causes a lot of people to pay attention to the market. So Ethereum makes it a move and then dips underneath. 800 might be too expensive, right? Nope. And we continue to push much higher. Much higher, actually. It was the beginning of a pretty good move. So here's another example in Litecoin. 4-hour time frame as well. You can see nice reversal candle here. Dip back into it. Struggle, fight, dip slightly, struggle, fight. If you remember, that was that double inverted hammer. So yes, it could be thought of as three white crows as well. And you'll find that as you learn more about patterns, a lot of times one can kind of be the other. And at the end of the day, they're telling you the same thing. So it's kind of irrelevant what you want to label it. So how do you put your stop loss? Well, the stop loss is pretty simple. It's just on the other side of the pattern. So in this case, if you go long on a break of the third candlestick, your stop loss goes down here. Well, where are you aiming? That will, of course, depend on the market you're in. But in this case, this was an area of resistance previously, so it makes sense that we stalled out there. Let's go ahead and put a couple of moving averages on this one. You can see the 9 supports this quite nicely. Go ahead and put the 20 on that one. And you'll see that they crossed right there. So the 9 crossed over the 20 in a sign of strength. Bitcoin. So this would be 3 black crows or 3 red candles. Now, I actually see multiple examples of this on this chart. You can see right here, we continue to dig into that. You can see right here, although I don't like this one as much because you could have made an argument for a hammer there. You don't really want conflicting signals. But technically that is true. And right here. So they're not as rare as you think, especially on short time frames. A true setup, of course, is only in the stock market or markets that close. So again, we don't get that. Now, a true one in the stock market, you can really see these things take off. So when you look at this one here, it makes sense because that was previous support, right? You can also make an argument for this one here because that was previous support. So clearly we are dropping. You can see that the market tried to rally and then we broke through the Bollinger Band midpoint at this juncture. So that comes into play as well. It suggests that we are going lower. And then beyond that, we can draw a Fibonacci retracement. And you can see that this started at the 50% Fibonacci retracement level, just as this one started at the 38.2 of the move lower. So all of this ties in and nicely. But at the end of the day, really what you're seeing is 3 candlesticks moving in a particular direction. That typically means that there's momentum, that there's conviction. You want to see it fight back a little bit and get repelled. That's essentially what you're looking for. You know, they in this case, they try to push it higher and they fail. They try to push it higher and they fail. They try to push it higher and they fail. And this was actually more like 5 black crows, truthfully, I suppose you could call it. But nonetheless, 3 is more than enough. You were never threatened with losses in any of the setups I showed. It's not to say that it works 100% of the time, but it's got pretty strong accuracy because you were clearly, at least at that point, trading with the short-term trend. Otherwise, the pattern couldn't even exist. So, something to think about. That is the last video of Module 2. Next module will be Module 3, and we'll take a look at real-world examples on how to trade various setups in multiple cryptocurrency pairs.